And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Beware the Ides of March. Certainly good advice if you're Julius Caesar, but it's just Tuesday, March the 15th here. My name's John Hoagland. As always, thanks for trusting me with your time. We're going to seek accurate context, good risk management, and always be remembering patience in our trading today. Be agile in your trading. If you're in the markets already, hopefully things are going your way. Economic numbers this morning, 7:30, the PPI final demand came out. They're still rising, but at a slower pace than expected. I'm hoping that this is going to be some kind of a trend. I have my doubts. Empire State Manufacturing Index slowing New York manufacturing. As far as other news is concerned, the Russian bombardment, inhumane bombardment of Ukraine continues after inconclusive peace talks again. Crude prices dive below $100 on technical break. And Chinese COVID slowdown fears. OPEC monthly report due out today, not expected to change any kind of production numbers. U.S. stocks mixed. Now pretty much higher after that number. Chinese stocks continue to get crushed. As always, make sure you hit the lucky like button, share, comment, question, feedback, and heckling and love are always welcome here at the forecast. Make sure you subscribe to our YouTube channel so you get notifications when we do go live. A brief look a few minutes ago at the VIX, the dollar index, and the 10-year yield. VIX up a little bit. 31.89, holding up above that 30 level. The dollar index down slightly, 98.74. And the yield on the 10-year just about even, just maybe a little bit lower here at 2.1%. We do have the FOMC meeting starting today. The release, again, of course, is going to be tomorrow. We have the API coming out at 3:30 for you crude traders. EIA tomorrow at 9:30 a.m. Central for you crude traders again. And then, of course, 1 p.m. Central. The all-telling FOMC release. And then, of course, the press chair conference about a half hour after that. Markets starting to move a little bit here this morning. Again, hopefully if you are in the markets already this morning, you've got things going your way. Speaking of you, Manuel, good morning. You're first in the room. You win the prize. Tachyon amplifier. You're getting there. You'll be there first tomorrow. Spencer, high volume, open interest in the ES June this morning. Shaw, good morning. Jay Crockett. My brother Rick, love you. Dave Francis, Drew, Scott Saw, Andy Concord, Zachary, good morning. Theo, always a pleasure to see you. Laura as well. Zerain, good morning. Luis, Dan Trader, Vince, good morning. Brian, chillin' with Dylan, chillin'. Terry King, John Doherty. You guys are going to get to know John real well next week. He's going to be doing the market forecast and the market recap. I'm very excited to watch. Spencer, Bill, S. Jewel, Brody, Devont, Sarah Hall, good morning to you. Yeah, we got to see the sunrise this morning here just before the market forecast after the time change. Frederico, good morning. Sarah Hall, good morning to you. Mirik, Elizabeth, good morning. There's a new name for us. Devante, Jay, good morning. Dan, NQ tested under the 13K lows overnight. Price defended and now back over it. ES did not test under 4,100. Expediter Dean, Zachary Sykes, Ngabo. Good morning to everyone. So, we've got our tasks pretty much set out for us every day. Our job is to be good risk managers first and find ways to profit after that. We will always, as Mike Patak always says, we always want to trade for tomorrow. We want to be here. So, our first job, again, is as risk managers and find opportunities. Find opportunities. All right. Getting off to a quick start this morning. Good day, 3 Lions Insight. Why don't we go ahead and jump into the charts here. Let me get set up here for the S&Ps. And let's take a look. Alrighty, here is the daily in the S&Ps. There's no question that the market is still holding downside structure in the medium time frame here. Let's get this straightened out here. Our highs were here just around the beginning of the year. We've been putting in lower highs. We've been putting in lower lows. Recently, we failed to put in this lower low here, and as Dan was mentioning, we have not traded down below that 4,100 level. We're working on some pretty important levels now, though. We've got our weekly kickoff level in the S&Ps. There's still so many uncertainties out there. I don't see that there's any reason to get too excited for any upside moves. We're still looking at this market as a market that I'm going to be looking for opportunities to sell strength. Weekly kickoff low remains a point of contention yet even today. Looked at it yesterday, looked at it last night. We're holding above it now. As far as open interest is concerned, we added 88,000 in open interest yesterday, but a lot of that is rollover related. So volume, open interest, difficult to read during rollover. It'll be over soon. We'll have 2.5 months in the equities, not to worry about open interest. Rollover, of course, does remain a factor. Structure to the downside remains. We've been putting in lower highs. We've got a couple of higher lows here almost. I don't know if that's going to hold up much, but what else we got here? Let's take a look at the 30 now. Andre Kontrov and my friend John Wolkowiak. Good morning, sir. All right. Open interest in, overnight inventory, largely mixed. Are we getting a little too long here coming in after the PPI numbers? Probably not. In value, after the PPI numbers, we're going to open in the area that would look for repair here. We had a double distribution trend day yesterday, and we've got some single TPOs right here. If we open in those single TPOs, first thing that I'm going to see this market try and attempt to do is to repair down to point of control from yesterday and to a possible high volume node up above. That's if we open in the single TPOs here. The fact that we're opening in range and in value suggests to me we're going to try and stay patient today. We're going to let the market establish an early range, and we're going to work that range for our opportunities. Our overnight low is down here right at last week's low. Our overnight high, just putting it in now, but still yet inside value. So try and stay patient today. We all are well aware that we have the FOMC meeting beginning today and with the release and the press conference tomorrow. I'm kind of expecting or hypothesizing that a lot of our longer time frame traders are going to be finishing rollover, and I think looking more towards making sure that they're hedged against anything unusual that might happen tomorrow upon the release or the press conference, than worrying about profiting from it. Even our longest time frame traders are interested in being able to maintain the accounts and to be able to come back on Thursday. So we got 2 days of potential kind of posturing, possible hedging in our equities and a lot of these other markets as well. The crude oil and the gold seem to be the most interesting markets. We're going to focus on a couple of things that are happening in those markets on the coach's playbook today. We're also going to take a look at those in the market forecast this morning. So, not in a big hurry to get into anything early in the S&Ps. We're in range. We're in value. Very little change in the perception of value. Are we getting a little long before the open? Perhaps we are, but I don't think it's going to be a big adjustment because, again, we are in range and in value. Wondering if there's anything else I'm missing here, and I'm sure there is. If you're thinking about taking a trade and there's 50 things that can affect that trade, if you recognize 20 of them, you're probably a genius. And as some of you that know me know, I am no genius. I'm sure Mr. Wolkowiak will back me up on that. So we just look for the opportunities. We look to manage risk. The S&Ps, I'm going to be patient. I'm going to let the market establish its early range. The opening range trades have been vicious and unfruitful. I'm not going to be looking for an opening range trade because, again, we are in range, in value. No rush. Trading Research, good morning. Suren, good to see you. And into the land of the crude oil. We started talking as the market was continuing to push to the upside, how this upside auction was beginning to suffer. We saw this whole push to the upside fail to bring in strong open interest. As a matter of fact, open interest kept falling off. Volume wasn't all that impressive either. Now we've got a bearish engulfing pattern. We've got a head and shoulders that we've now broken out below the neckline, and we are seeing some continuation to the downside, which if you measure the move from the high of the head here to where the neckline broke, it has us with a measured move down around $75, $76 a barrel. That would be wonderful. But unfortunately, it's going to take 8 months for that to come in to play at the pump. Boy, they sure raise those prices fast when crude oil goes higher, but it takes a long time for it to come down. I'm thinking that this move to the downside is not over, but of course, anything can happen. ACH, that's my new acronym for trading now. Anything can happen. Dan, you're right. No defenders of the realm in crude. Seems like nobody wanted it up there as open interest kept dropping. And that's one of the big factors that we look at in the auction process is volume coming in. Are we bringing money into the market in that direction? And we just would not do that. So we've been watching for this pullback. It's not that it's easy to catch the pullbacks as day traders, but at least it keeps us out of trouble by not looking for longs. So open interest yesterday, all around, we lost 15,000 in open interest. We lost 26,000 in April. Okay, next Thursday, I believe it's next Thursday, is switch day. We're losing a lot of open interest in that first month. We added 6,700 in May, in the May contract on a breakout to the downside. So we're seeing volume already slowing in April. We're coming into rollover. That's going to further blur our open interest, but it doesn't blur the open interest that we saw coming up here, the lack thereof, if you will. I'm going to get into the opening range here really quickly. Let's take a look at the 30. Open interest, overnight inventory, strong to the downside. We got a lot of shorts in this market down here. Short time frame, pea shooters like me, overnight shorts, yes. But we're going to be opening with a gap. Now, does that mean that the opening range trade might be more likely to occur? Yes, it is. Yes, it does. It does mean that. So we're going to take a look. Settlements all the way up here, 103.01. We're trading $96 right now. Let's take a look at the opening range and see if we leave the opening range at one extreme or another. This is the 1 minute chart. This opening range shows us right here. We got 95.77. We got 96.32. We got about a 60 tick opening range. With these opening ranges in crude oil have been massive. It's going to be a hard trade for us today because of the amount of risk we have. The first minute is done. We've yet to extend either side. $66, $64. Okay, we've broken out the downside. If we're going to be taking the opening range trade, we're short one tick below that opening range. And our risk is above the high of the opening range. That's what makes this so difficult, is the amount of risk we have to take with these big opening ranges. We are looking for this market to continue to the downside because of the, here we go again, here we go. We have bearish engulfer. We have a head and shoulders that is broken out to the downside. We have hollow rally on the way up. There's a whole bunch of forces that are, leaning towards continuation to the downside here. And again, ACH, anything can happen. Opening range remains the high of the session so far. If that's the case, sellers may be in control for the at least the early part of the session today. Now we're getting a nice pullback into the opening range, which can give us an opportunity to limit our risk. We've looked out below. The market has taken a look down below. If it's going to reject down below, well, that's something we're going to have to deal with. But at the very least, opening range remains the high of the session. Coming back inside the opening range gives us the opportunity to limit risk for a short. If we get there, if we get deep enough, we'll come back to that and see how this opening range plays out here later on in the forecast. Let's take a look at the NASDAQ now, though. NASDAQ, similar but different. Weekly kickoff low, not necessarily in play for us today the same way it is in the S&Ps. We're more than 20% off the all-time highs. This is in bear market territory. This is in correction territory. The NASDAQ has been presenting as the weakest of them all. We're still in rollover, but we did add 11,000 in open interest on the downside, breakout below weekly kickoff low yesterday. Rollover does, however, remain a factor. We are well aware that the downside structure remains intact, even more so than the S&Ps, because yesterday we did put in a slightly lower lows, lower highs, lower lows. The market is moving lower. The structure is saying that it is moving lower. Again, volume and open interest is going to be a little bit blurry until we get past the expiration of the March contract. Take a look at the 30. Back over the opening range now. Geez, that didn't last too long. Those opening ranges, when they are big like that, they provide a lot of risk. That's why I'm not playing it. NASDAQ, similar situation to the S&Ps. We've got settlement down here, 13,044. Overnight inventory largely flat, perhaps a little bit to the long side. Last week's low seems to be somewhat in play. We had some resistance up there throughout the overnight session. We're back above it now. But again, we've got a double distribution trend day. We've got a possible repair day, and we're inside value and range. So again, I'm going to suggest this is where our patience comes in, because we are in range, in value. Little change in perception of value, knowing what we've got coming out tomorrow. Stay patient. Let's run back and take a look at that opening range trade here in the crude oil. Out already. So that's a big loss. If we were able to stay patient enough to look for an opportunity up near the high of the opening range, we did ourselves a big favor. I can risk this. I don't like risking 60 ticks. I'm just not that big a shooter. All right, let's take a look at gold. Gold is our other more fascinating market here this morning, and it's a little bit different than the crude oil, although it looks very similar. The difference is we had some open interest coming into this market on the upside. We've got a lot more longs in this market, I think, than even perhaps in crude oil. As was mentioned, no defenders of the realm in crude. We didn't bring in a whole bunch of new longs up there. So, and we had brought in longs in gold. So I think the gold is a little bit more likely to have a deeper pullback. But we've got a similar situation. If you look on the 30-minute, it looks like a head and shoulders pattern, which we've broken out down below the neckline, and the neckline extension takes us down to around 1842, 1840 area. We've got to continue to accept down below weekly kickoff low, which is 1931. What else am I looking at here? We lost 8,200 in open interest yesterday. That's a lot of those longs that were trapped long up here. We've got a bearish engulfing pattern. We've got the head and shoulders pattern. And we're now broken out below this trend line, which we had 1, 2, 3, 4, 5, 6 points of contact on. Now we've broken below it. This is stage 2 of the market state change that may bring us to this measured move to the downside, is that acceptance below the weekly kickoff low. Here's the 30. Got a lot of overnight shorts in this market. Settlements all the way up at 1960.80, last week's low. Lots of shorts, lots of visuals down below here. These green lines are naked points of control that have yet to be tested, but look like they're going to be tested today. And we've got weekly kickoff low, 1931. 1931. We opened, we tested it. We opened basically right at it, and we've been pushing and trying to test lower ever since. We've now put in a new regular trading hour low below the overnight low, but just by a little bit. We're going to see if we can't come check out this naked point of control down here. If the short, weaker hands, short time frame shorts in this market continue to see help from the longer time frame, daytime frame traders here, they're going to hold on to these shorts until the very last minute of the day today. If we don't see continuation, all of these shorts can certainly bring price back above weekly kickoff low in an attempt to close the gap or even to get back to settlement. So we've got a lot of consternation here at around weekly kickoff level here, 1931. And we hold it below it. It's a short below. If we get back above it, it might be a long above for a brief period of time. I'm not falling in love with any longs in this market because I believe inherently it still remains weak. And again, headline risks can change anything in a heartbeat. ACH, anything can happen. Best thing you can do is protect yourself with a stop. You want protection? Always wear a stop. Let's see what the euro has for us. Euro, still a bit of a dead stick in my mind. Not really that interested in anything that's going on. However, we've busted out to the downside. Now we're starting to coil a little bit. We've got higher lows. We've got lower highs. There may be some energy building in this, but unfortunately, according to open interest, the we lost open interest. So it seems that there's less interest in the euro right now than there would be more. It's the end of the roll. We got to remember that may be somewhat part of the rollover, that loss in open interest. Balance, short time frame control, lower highs, higher lows. There's hope, and there's perhaps some energy building in this, but I'm not ready to jump in here just yet. Take a look at this on the 30-minute chart. Okay, here's our higher lows and lower highs. Okay, these would be the trend lines that would be created off of those, and we're still relatively centrally located between them. So I'm looking at a market that is short time frame controlled. We talked about this yesterday on the recap. The market opened in range and value, traded above previous day's value to value low from last Thursday. Where did it trade down to? Well, it traded down to kind of a high volume node from last Friday. The market is really just seeking short time frame levels to lean on, which is good. It gives us the opportunity to limit risk, but there's just so many of them. We've got a naked point of control we've been trying to get to in regular trading hours here. No gap. Overnight long. Don't really see a pullback just yet from our overnight weaker hands, pea shooter longs like me. So I'm going to wait. I'm going to stay patient. I backburnered this market yesterday. I'm keeping it on the back burner today. We're gonna let them cook back there. Very slow simmer. We're gonna kind of braise them, if you will. The 10-year, we know rates are going up tomorrow. The question is really how much. The volume was pretty iffy yesterday on a push to the downside. We did add 25,000 in open interest, which isn't huge for the 10-year. Still indicates money coming into the short side. Well, yeah, we know rates are going higher. We don't know how much. Got a day and a half to wait, ladies and gentlemen. Take a look at the 30-minute. Okay, settlement. While we're waiting for information, settlement and inventory adjustments can be really helpful. Unfortunately, our overnight shorts are getting paid. They're getting what they're looking for. Regular trading hours sellers continue to push price lower. We did this is the 10-year. This is not the 10-year. That's the natural gas. We're going to get to that shortly. Here's the 10-year. Similar situation. Adding 25,000 in open interest on the breakout below weekly kickoff low. Oh my goodness. I gotta get these charts straightened out. We do have because I was lining up what was happening on the 30-minute chart. Volume iffy. Rates are rising. Open interest increase. Okay, we got a day and a half to wait for the FOMC meeting. Let's find the right chart here. Here's the 30-minute and the 10-year. This is what we're looking at. We're looking at some overnight longs that have brought us back into range and into value. Look at all the shorts that might be still hanging out in this market. We may be getting a little bit of a short squeeze that could take us back to weekly kickoff. We've got a gap here that's yet to fill. We've got a couple of naked points of control up there. I don't see us doing that. I think we're going to be really kind of in a holding pattern until after the FOMC meeting comes out. The FOMC meeting starts today, and the release of any changes is tomorrow at 1 p.m. Central, and then at 1:30 Central, Chairman Powell will have his press conference. All right, now let's look at the nat gas. Got to make sure I'm looking at the right chart here. Range bound, short time frame control, adding 1,500 in open interest yesterday. We know we're coming into rollover in about a week and 2 days, about 8-9 days will be roll day for natural gas. So now we got to deal with rollover in nat gas. Everybody seems to hate rollover, myself included. Largely in balance. The market's looking for new data, short time frame control. Now let's look at the 30. Now we've got our settlement price all the way up here, 466 approximately. We've got all these overnight shorts here. They continue to get paid after the regular trading hour open. We've got last week's low here. We got weekly kickoff low down here, 438. And until we break out past that, I think we're still in pretty much short time frame control. Let's take a look at our 30-minute in the crude oil now, our 1 minute, I should say, back inside the opening range. I was wondering if we were going to turn this market around, seeing that the natural gas is putting in new lows. And I agree with you, Rick. Possible rate hike already built into the market. I think there's a lot of question as to, is it going to be 25 basis points or are they going to go 50? I think there's very little speculation that they're going to go with 50 basis points, especially with the instability and uncertainties in the world right now. But we'll have to see. Yeah, people talking about 7 hikes this year. I doubt it, but anything can happen. We got our new acronym there for us today here. All right. All right, well, folks, we've got our tasks set forth for us today. As always, there's a lot of challenges in trading, and I'm looking forward to facing those challenges today. I got a good night's sleep last night. I'm hoping you did too. I know Sunday night, dog kept us up most of the night. I was really not at my peak yesterday, but I'm feeling much better today. So I'm looking forward to engaging in the market, but only engaging in the market when the market tells me to. I'm not going to go looking for trades today. Every time I do that, I find a lot of trades, but they're not usually the good ones. Yeah, market's looking for a 25 basis point hike. Fed may hold off. Yes, of course. I like your little, very thoughtful emoji. All right. Yeah, decent drop in crude. Look out for a bounce, but that rally in crude, we were seeing how hollow it was with the lack of open interest. Yeah, dog is fine. She's fine. She was a little tired yesterday because she was up all night, but she's doing fine right now. Thank you, Dan. Yes, deep breath, peace. Stay humble, grateful, and creative, and flexible in your trading today. The market is talking to us. The market is telling us what it's trying to do, and it's also telling us how good of a job it's doing getting there. If we can listen to it, we can just stay quiet and let the market talk to us. We can have a really good day today. I'm looking forward to that. We've got Coach's Playbook at 11:30 today. We're going to be talking about a couple of the reversal patterns that we were talking about here in the market forecast. And then we've got the weekly, recap today at 3 o'clock. Tomorrow, again, we'll have group coaching. I'll put the link in tomorrow during the forecast. We'll also have the Make Hogue Money on Thursday, which is a lot of fun, and we'll see how that works out for us Thursday. So stay cool, calm, collected today. Let's get out there. Let's profit. Have a good trading day. I'll see you for the Coach's Playbook and again at the recap. Trade well today. I'll see you in the proverbial pit here in just a few minutes. Linda, what kind of a dog? I have she was a rescue. She's kind of a black German Shepherd. Our trainer thinks she's a Malinois, but she's very sweet, just strong as an ox. Maybe later on Or tomorrow, Linda, we'll meet her. I don't know where she is right now. She's laying down somewhere. But maybe we'll meet her on the recap or tomorrow on the forecast. She's a beautiful dog. We love her, and she loves us. She's very sweet. All right. Get out there and profit today. I will see you at 11:30 for the Coach's Playbook. Trade well.